good, y'all? It's Maul here from the Gym Therapy Pod, and on today's episode, we're going to be talking about a bullish market and a bearish market. So you may have heard those two terms before, a bearish market and a bullish market. So we'll just start with the bearish market. So basically what a bearish market is the market is on a downturn or a decline, right? So that basically says that people are pulling their money out of these securities for whatever reason. Right now, some will say we are in a bearish market, and we can say we're in a bearish market because that basically is justified by a 20% decline from the high, right? And so what happens or what causes the market to be bear are things such as inflation, high interest rates, things that are going on in the news, political tactics, or things going on in politics, a numerous amount of things that are going on. You can say the war in Ukraine, right? So many different things that are happening that are causing a down cycle or a downturn in the market actually proposes or makes up a bear market. But the positive in a bear market and the market being on a downturn or a down spiral is that this is the time in which wealth is made. And the reason I say that is because the prices of securities are much cheaper to buy, right? So let's say you have a security that was $200. Cool, 200 may not be too much, or it may be a little bit for someone to buy in terms of like a security or buying stock. But let's say during a bear market, that security is now $100 or $90. That same security is more affordable for you to buy. While most may look at this as a downturn or a reason to walk away, others with the different mindset looking at this like, okay, I'm going to be cash heavy and wait for a bottoming of this bear market to go ahead and put an influx of my cash into these securities, because the name of the game is buy low, sell high, right? So during a bear market, you're still doing the same analysis, right? And then we talked about plenty of weeks ago or different weeks, right? You're still looking for great companies. You're still looking at different trends. You're looking at the balance sheet. You're looking at the CEOs, all these other things, looking for great companies that are affected by the bear market, because most companies are affected by it. And you're looking for those great companies so that you can see where the bottom is in this bear market and look like, okay, cool, this company is now at $70. Let me go ahead and buy this, because although it may be affected by the bear market, does not mean that it will not go up in a bullish market, which we're going to talk about next. So this is the time, again, in which ultimate wealth is made. And it's the number one key in this is patience. You just want to be patient through a bear market. You want to be cash heavy, so when the time is right, you can go ahead and put your money inside of these securities and wait for the incline of those said securities. All right, so now that we talked about a bear market, we're going to talk about a bull market. Everybody's favorite market, right? Because everything is going up, everything is green, everything just looks good. So a bull market is what it sounds like, is the actual opposite of a bear market. So a bullish market is a market that's just on a steady incline. So everybody's happy, low interest rates, no inflation, news is good, like just everything is like positive. Everything is just going extremely well in the market, right? And so we just came off of a recent bullish market, the longest one actually ever. It was about 14 years, right? 2009 to about 2020. Some would say even during the pandemic, like 2020 through 2021, maybe a little bit in 2022, but mainly 2020 to 2021, there was a very, 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 very heavy bull market, right? One will say that everything was like green. You know, like once COVID hit, obviously everything took a major dip. And a lot of people bought at that bottom, but everything seemed to have just like skyrocketed up. Not all companies, but companies that made sense, you know, like video communication companies such as like Zoom, like DocuSign, things of that sort. But for the most part, we were kind of in a bullish run. Like it was, you know, it was a good time during that. But on average, a bullish market only lasts 3.8 to 4 years, right? And so the beauty in a bullish market, again, is that everything is rising, but you can't have a bullish market without a bearish market. And so, like I said, during a bearish market, you want to be able to buy those securities at a low, because a bullish market is going to come, and that's going to happen. And usually, again, during the bullish market is like when you'll see a lot of upside in a lot of these companies that you have purchased when they were at a low. It's similar to buying something that's on sale, right? Let's say you go to the store and you see your favorite coat, or see a coat that you want, or shoes, or whatever that you wanted, and the price tag was originally, you know, pretty high, but it went on sale, and so that, oh, now it's more affordable for me to buy, so I'm going to buy that, right? Similar aspect when it comes to the bearish and bullish market. What I always look at and always say during a bearish market is like everything is on sale, right? Let me go ahead and load up. Let me go ahead and buy 5 to 10 shares of this company. Just keep adding in incrementally. And then once a bullish market comes, those same shares of that company that were like 10, 20, 30, 40, whatever, however much it was, are now like 2, 3, 4x, right? So now I have made a major profit because I bought low and sold high. So understanding the differences between a bearish market and a bullish market are actually key as well. That can, in a way, be both fundamental and technical analysis on just depending on how you switch it or how you kind of look at it or analyze it. But a bullish market, again, is very good because that's just showcasing that the market is healthy, businesses are doing well, companies are actually making money, and things are going well. Again, during a bearish market, you have a kind of this negative connotation. Obviously, the market isn't doing too well. Things are on a decline. Businesses aren't doing well. Again, we're witnessing it right now, right? A lot of businesses are doing a lot of layoffs because of inflation, because of the recession that we're in, but they want to save. They want to save on costs, so they're, laying people off to save billions and millions of dollars, right? But that's not going to last, for a very, very long time, because we're going to go into a bullish market. So where those companies probably cut costs, now they'll be able to maximize or make more profit. And then once the bullish market comes, their earnings are going to be better. Their earnings per share is going to be better. Their quarterly revenue is going to be an increase. Their productivity is going to increase. The products that they put out are going to increase. Subscriber numbers are going to be up. And then we're going to be in a healthier market. So once the Federal Reserve stop, putting money inside of the market, or stop quantitative easing, which I believe they did stop, or interest rates stop getting raised, then we'll go into more of a bullish cycle. But again, the name of the game and the key to the game is to buy low and sell high. So be very mindful of that when things are red or things are going down. Don't shy away from that. Just analyze that and look at that as an opportunity for you to actually invest more or to put more money in to actually maximize your profits while things are, what I say, quote unquote, on sale, right? So once that bullish market comes, those things that you purchased when things were in the red or on sale are going to triple or 10x tenfold. So don't be scared of a little bit of red. If your portfolio is taking a little bit of hit, it's actually okay, because the companies that you may have or companies you're analyzing are probably very, very great companies. And just because they're in a bearish market right now and it looks a little bad does not mean that it's going to be bad forever. So you can go ahead and keep reinvesting, but utilize these different strategies to go ahead and maximize that dollar in profit once a bullish market comes to fruition. And you can go ahead and sell some of your securities and take some of that profit overhead and just kind of rinse and repeat. Once the bear market comes back again, go ahead and do the same thing. And then once the bullish market comes, sell some off the top, take some profit, and keep on going like that. So again, these are, things that you may have heard or some tips that you can get from a bullish market and a bearish market. So I hope this was helpful in understanding what a bearish market and what a bullish market is. Again, there's going to be a description in the caption to kind of give you a better synopsis and give you a little bit more reading on exactly what both of these type of markets are. But again, I hope this definitely helps you out in your journey on beginning to invest or starting your investment journey. So as always, tap in with us. We're dropping content every single day, every single week. Make sure you like, subscribe, share, comment, save, do everything that you can. We want to get on this algorithm and keep going up. So again, thank you guys. I'll see you next week on another episode of Technical Tuesdays.